It's me Pavitran here, and today we're gonna do a weekly forecast of crude oil and how crude is going to behave in the coming weeks. Before that, as usual, a previous week forecast on how the price has been reacting to that. Um, uh, Consider this was the recent market structure: lower high, lower high, and lower high. This was slightly it was trying to make into a bullish mode, but by after this formation of the lower high, then market is as usual, it's forming the structure of lower high and lower low concept. Here you can see the lower low, and again the lower low has been made. As you can see here, the market structure is clearly on a sell on rise market. So whenever when we find pattern some kind of a lower high and a lower low concept, it's a clearly sell on rise market. On Monday also, it opened on a slightly or more bearish note, open and high equal to the same, and a big drop in bearish candle that was nearly breaking $34 region. And if the follow through had came, then odds of testing 31 is more in our favor, but we did not see any follow through, so that acted as a lower low. And in the same day, and it has taken support at 34, and it rallied all the way to till 36. So as you can see here, so this is a recent to lower high. That swing high has been taken out here. So what that means is buyers are trying to come into the market. When that region is being taken out in this place, that means it's a clear indication is that after the region has been broken, the first indication is that 36 is getting broken, or even before prior indication is that it's taking support at 34. So what we should have done is that we should have taken entry somewhere either in this candle or this candle after this candle. So this should be our entry with the stop loss below this 34 region, or maybe I will try to zoom it. Sorry. So our entry should be is below this candle low, so we should have entered somewhere around the break of the region, and our stop loss should be below 34. So this should be our stop loss, that region. So that below 34, it's a good region for our stop to be placed, or you can even place below this recent lower low. And we are aiming for 36. Maybe at 36, if it takes resistance, then well and good, we should book your profits. And if not, you should have just trialed with the previous candle low, or you should have used some trailing stop loss methods which is convenient to you. Once that swing high, the recent swing high is taken here, then it's a clear indication is that buyers are very strong in the market. And once that high is taken out, then it's a buy on dips market. So the structure which has been following for the past last week before the start of this week, it has been clear sell on rise. And once the recent high has been taken out here, then it has completely changed the market sentiments to buy on dips market. It's bullish. And after that, what we have to do is that just we have to wait for a lower dip, and whenever it's a higher low is being formed, then you can initiate a trade in the long week. So what I mentioned last week was it's very obvious. I will show you what I had mentioned. So there are marked zones over these regions, and as you can see, it has clearly taken a resistance here resistance, it has broken, and after that it taken support, it took support here, it again took support there. So after coming here, it's the same region, that's 34 region, it has again taken support over this region. So that's what I mentioned last week is that we need a close below 34 for market to further rally towards the $31 region. So here, this is the $31 region which I have marked. It's a kind of a demand zone. Even this is a demand zone. Once that level gets broken on lower side, then we will be heading towards 31. But what had happened instead, it has tried to break down the 34, but we did not see any close on 4-hour candle. So it's very obvious that sellers are not very strong in that market. There was no follow through sell even here. So it is very obvious this buyers are trying to take into command of the position over these region. The buyers which have bought on the 34 level are still very strong. They are trying to push the market up. So right now on a 4-hour candlesticks, it's still a sell on rise market, but we are not very sure. So for sellers, to be again very strong, they need to break this recent lower low. So market is currently at a lower high. This is the recent lower high that has been made. If and a sellers has to be very dominant from here on, they need to market to push down here. They need to break this level. Only if they break this level, they can able to again gain a strong momentum and they can heading towards 31. Until and unless if a market is not heading into the direction, then market can either take support at 36, or even market can take support and it can go test this region. Either market can test this region and take support, or market can stay in sideways and it can even break down. So we don't know how this is going to behave. Right now what a structure is clearing explaining is that it's a sell on rise market. So you can see here lower high, still lower high is in pending. So if we try to connect the trend line, sorry, if you try connect the trend line like this, or just a minute, sorry, if you try to connect the recent from here, consider this, until this trend line is intact, then we will be seeing some kind of resistance from the sellers on top of the level. If market tries to come near this region again, they will, there is a possibility that that can be taken out. So we don't know for sure. But in a 4 hour candlesticks it still remains the same. It's a sell on risk market. So when it will become buy on dips market is that this recent lower high has to be taken out. So either this region, because it's having a lot of wicks here, if 39 has been taken out, then will be heading towards 42. So what is the present scenario is that we need a strong close, or we need a strong rally above $39 on a 4 hour candle close for a market to head towards 42. If not, if you can see any of bullish candles on 36, near $36 region, then we can take as usual the same long by placing the low below the $36 region. So it can even maybe cross or it can even cross 42, and it can even further rally towards $50. So it has been struggling in this range. Two big hurdles on upside, one is 42 and another one is 43.5. That is the recent lower high which has been tested for quite some time. So as you can see, 42 hasn't been broken. Once 42 has been broken, then we will be heading towards this region. So this is a great supply zone which is very much near to 43.50 to 44 zones. So from 7th of maybe 4th of September, we hasn't breached 42. So for market to further rally upwards, we need 42 to break, and another huge hurdle is 43.5 has to be taken out. So right now the scenario remains the same, and the range remains the same. So it's again coming back to the previous level, 42 on upside and 36 on the downside. If 36 broken out, then 34. Even if 34 broken out, then 31 is on the cards. On upside, still we don't have any clear breakout indication, or we don't even have any clear indications regarding either supply cut or production has to be cut down. No further indication from OPEC. The only volatility factor that still remains in play is US election result. So just be cautious about it. Either a tweet from Mr. Trump can tumble any markets. Just be very careful and have your positions with tight stop losses, or even try to trade lightly with the positions. Don't go for heavy. Maybe somewhere around mid December, we think that most of the volatility will get subdued, and after that we can try to increase our position sizing. Before that, in times of volatility and uncertainty, just be very patient and try to protect the capital. And for in a intraday basis, the structure remains the same. It started to form lower high, and from here it will get to lower low 2, and it still hasn't been completed, but it will get into that mode. Once that gets getting done, then the structure will remain sell on race market in 1 hour time frame. Just look out for the recent lower high has been taken out. If the recent lower high will taken out, then it can further proceed into buy on dips market. Until and unless that happens, then we will be heading towards as usual. If this lower high is in place, then 36 will be on the cards. If gets broken, then 34. If 34 gets taken out, then 31. On the final note, 42 is a major hurdle for us, and once 42 has been taken out, then 43.5 will be taken out. I hope so. 43 has to be taken out for further rally towards 45. So the bigger range for coming week is that 42 and 34. And for smaller, or if you need any tighter range, then 39 and 36 will be on the cards. So right now, let's see how this week goes on. And for me, it's still a sell on risk market. I will be fully buy on dips market only when it breaches 43.5. So until and unless that is taken out, and I will be in sell on race market. Now let's see how this week goes on. Last week was quite adventurous week, I have to say, because after this big red candle there was no follow through. It took support at 34 and it started rallying all the way up till 39. So it has faced some kind of resistance at 39. So that's why the tighter range is 39 to 36, and the larger range remains 42 and 34. If either of this 42 or 34 ranges gets taken out, then we will be still in a sideways of this bigger range. Until and unless this big range gets taken out, there won't be huge volatility. And in case if huge volatility comes also, just try to be cautious with the levels which I have marked. Even if huge volatility, we can trade with small stop losses. Just be mark these levels on your charts and focus on how price is been reacting to these levels, and you might get some kind of an idea. Thank you.